Welcome back. Federal Reserve Governor Christopher Waller sharing his thoughts on the economy after a weak 20-year Treasury bond auction tanked stocks yesterday, sending yields higher. Fox Business's Edward Lawrence is live this morning in Washington with first on Fox Business interview with Federal Reserve Governor Chris Waller. Edward.
Thanks, Maria. Yeah, this is an exclusive interview with Board of Governor Chris Waller. Thank you for being here, first of all. I want to get your reaction to that weaker than expected bond auction. Does the Federal Reserve watch that? And could there be a scenario where the Fed steps in and buys because of the weak bonds?
No, I mean, the auction yesterday was, the markets are watching the fiscal policy that's the bill being put through the House and the Senate. And they have some concerns about whether it's going to be reducing the deficit. I mean, we ran $2 trillion deficits the last few years. This is just not sustainable. And so the markets are looking for a little more fiscal discipline. They're concerned. Hopefully, as the bill continues to go on, they'll be saying, but then the markets are just going to demand a premium for this. But as far as the Fed, no, we can't step in and buy in primary auctions. Congress set up the rules. We cannot do that.
On rate cuts, where the Federal Reserve President, Raphael Bostic, says one rate cut this year. Where are you on rate cuts?
Well, the economy, if you look at the hard data, the economy's not doing quite well. We haven't seen a lot of effects from tariffs yet, but from everything I've heard talking to CEOs around the country, there's going to be some coming, both in the form of prices going up. How much is not clear. If Secretary Bessent can make sure we get a lot of trade deals where these things are closer to 10%, standard rule is we can handle this. That's the standard thing. But very high tariffs are going to be much more disruptive to the economy. So if we can get the tariffs down closer to 10%, and then that's all sealed, done, and delivered somewhere by July, then we're in good shape for the second half of the year, and then we're in a good position as a Fed to kind of move with rate cuts through the second half of the year.
So you're not seeing any rate cuts maybe even through the summer?
Well, like I said, we're going to wait and see what these trade deals do, and we're going to have to wait and see what happens with the April 2nd tariffs that were postponed till July. We want to see whether those are actually going to be reimposed or not. If they are, they're going to have much bigger impacts on inflation and put more of a handcuff on us to do anything with short-term rates.
So your forecast is on pause, and you can't say whether the Fed would maybe keep to that 2 rate cuts that they had sort of forecasted.
Yeah, I mean, that's the thing is I'm much more optimistic now than I was a month ago that we were going to be able to get a decent average tariff across the world. And then, so once Secretary Bessent took over, started cutting these deals. Sounds like there's a lot more on the table. That's all good news for the economy. This is what I'm hearing. CapEx investment spending is just frozen, and they're just waiting to clear up some of the tariff uncertainty. Every CEO I've talked to said they can deal with a 10% tariff. They can't deal with 25 very easily without passing that through or stopping other things. So I'm very hopeful that the path the administration's on now is a good one. It's going to help in the second half of the year. Will be a good economy.
That frozenness that you're talking about from CapEx. At what point does that start to affect the greater economy?
Well, the key thing is that they're not canceling anything. They're just pausing it until they get better clarity on what's going to happen. So what you're going to see is you'll see maybe a soft patch in investment, CapEx spending, business fixed investment for a quarter or more. But then once some of this uncertainty is all resolved, they see where they're going to go. This capital will be released, and you'll start seeing a boom. So it's more you're kind of pushing it off into the future as to doing it right now. But it's not necessarily going away.
So you're looking fourth quarter, maybe a
Could be
surge?
Fourth quarter, yeah.
Tariffs. Do you see a one-time price increase? The Federal Reserve Chairman says he does. What do you see?
Yeah, I've been arguing this for over a year, since last June, that straight economics this is a one-time price increase. It doesn't cause persistent inflation, and the standard central bank playbook is you just look through this. You don't overreact to it because you're going to then raise rates, hurt the economy for something that's just a one-time price effect. So that's been my view for well over a year, that we have to kind of look through this. And I don't think there's a lot of things in place that are going to cause it to be persistent.
The 10% baseline, it seems, tariffs will remain in place. Will that affect the economy long term in terms of prices? Yeah,
it'll have some pass-through. Most of the firms I talk to, there's this kind of simple rule of thumb. A third of it will be eaten by the supplier, a third of it will be eaten by the firm, and a third will get passed on. So if it's a 10% tariff, imports are 10% of the price index, so 10% on 10% is a 1% increase in the price level. That only means a third of it's going to get passed through. So instead of something like 2.5, you might see 2.8. but that's it. And then inflation should start coming right back down.
Governor Waller, I appreciate your time. Thank you very much. So, Maria, we're going to toss it back to you. See, maybe looking at the second half of the year for a little bit of economic boom. We'll have to see. Back to you.
Well, for sure. And Edward, Kevin Hassett told us the other day when he was with us on this program that he's expecting growth of north of 4% in the second half of the year, Edward. So that's the feeling at the White House. But I'd like to get your take and the Fed governor's take on rates, because the 10-year is spiking again, Edward. And I think that's why we're seeing a sell-off in stocks right now. The 10-year Treasury yield is up 2.2 basis points right now, Edward. It's sitting above 4.6%. I'd like to know Chris Waller's assessment of why rates are spiking right now.
Yeah, it's Governor Waller. Maria was asking, I want to know about the rates. So the 10-year spiking, you see it up 1.9 basis points to 4.6%. Why do you think the 10-year again today is up?
All right, like I said, everybody I've talked to in the financial markets, they're staring at the bill, and they thought it was going to be much more in terms of fiscal restraint, and they're not necessarily seeing it. And therefore, there's going to be a lot of issuance of treasuries. And in order for them to buy these things, they wanted at a lower price and therefore a higher yield. Right. So that's just what you're seeing.
But what about the demand? I mean, global demand. The markets may be looking at a weaker global demand. Do you think going forward?
Well, there does seem to be a risk off on American assets across the board, not just government debt, but everything. And whether that continues into the future or not, I don't know. I think as long as the economy kind of gets back on a good path, the economy starts growing, inflation stays down, you might see a resurge in demand for American assets.
Thank you very much, Maria.
All right, Edward, great interview. We appreciate your time and the governor's time there, Christopher Waller. Stay with us. We'll be right back. You're watching Mornings with Maria live on Fox Business.